Hi, I'm Nisha Khanna, and I'm here with Tarek Morshed of the Morshed Group at Sotheby's in Austin, Texas. The Morshed Group specializes in representing entrepreneurs, founders, C suite, and high net worth clients in their residential and commercial real estate needs. Today, we'll discuss what happened in Q3 of 2023 in the Austin market, what to expect looking ahead, and what it all means to you, whether you're a buyer or seller. Tarek, welcome.
Thank you.
We're looking forward to hearing what your team has to say today.
Thank you, Anisha. As always, we love to share what we're seeing based on our analysis of the market and just the deep dive that we always do, and with which we always just share and advise our clients at the Morshed Group around the real estate market in this ever-changing market here in Austin, Texas.
So, Tarek, what happened in the third quarter of this year in the market?
Well, I would say there's three main things to note for this quarter or for Q3. Number one, the market saw some additional softening, bringing us to about 7% depreciation in prices for the year by the end of September, which is about on track for what we expected. Number two, supply of housing remained the same as the end of Q2, which was actually a pretty good sign. That was about 4 months, and we did see a little bit more of an uptick on the higher end. But at 4 months supply, we're actually in a real estate market environment that's pretty undersupplied still. And what I mean by that is a 6-month supply, which is about 18,000 homes available, is typically considered an equilibrium market between buyer and seller demand. And we would normally see 4 to 6% price rises in that environment annually. So at 4 months supply, there's about 11,000 homes on the market, which is well below the 18,000 homes that's considered a normal market. Number three, the job market just really continued to hold stronger than expected, showing growth in both jobs added as well as unemployment actually decreasing. So while buyers really gated buying due to rising rates, this is big news. You know, Austin's on pace to add 40,000 jobs this year. That's number 7 in the country. And the unemployment rate actually decreased from 3.8 to 3.3%. And again, while buyers are gating due to rates, it's really creating pent-up demand given the job growth and these other items. At a 4-month supply, you know, with 11,000 homes, that's the same as last year, even though prices dropped about 7%. And given our fundamentals in the job market, we think things will shift quickly once rates actually get back in place or start moving down, especially in the higher end. And so to share maybe a real world example, we can take this unique new construction home. It's one of our listings. It's the first of its kind as a luxury modular spec build in Austin, located in a really sought after area, Deep Eddy, Terrytown, and it's priced well below market highs of last year at $3 million, which is about $875 a foot. And it really is a great price for this home. And while we're getting steady traffic, buyers are generally like just kind of waiting to see what happens. And I believe as soon as the rate environment starts cooling, this home sells quickly, and whoever is purchasing it now is going to be very happy looking back in a year or so.
So, Tarek, what's happened so far in Q4?
In Q4, buyers have really ground to a halt. While Q4 is typically slower, this year it's incredibly slow. The sentiment is, hey, I can wait and I want to make sure the market isn't worsening. And so the only places that are selling are ones priced well below market value. At the same time, sellers are being buoyed by a lack of inventory as well as not wanting to give much more up of their equity than they already have. And so with buyers resisting moving forward due to rates and buyers and sellers holding on the way they are, it's creating a stalemate, kind of a showdown of sorts to see who buckles first.
And how do things look ahead?
I think we've hit bottom, and we feel prices may drop 2 to 3% more, if that. So we're pretty much at the soft landing we forecasted. We'd also forecasted that rates would start moving down slowly beginning in December, and they actually have. But until they move down to about the 6 to 6.5% range, buyers are probably going to be patient. So we're expecting a slow but kind of bottoming out Q1. And then by end of Q2 in 2024, we think rates will move down further and that the market's poised for appreciation on the back half of 2024, given lower supply, stable job market, as well as just steady population growth. And that's certainly in contradiction to articles like this one by Mansion Global predicting 12% depreciation for Austin, but we feel confident in our forecasting for next year.
So, Tarek, what does this all mean for sellers? What should they be doing or thinking in this current environment?
You know, for sellers, you're going to have to feel, and they're going to have to feel the pain of value seekers till rates lower through this quarter. To sell as a seller, you'll have to really leave some equity on the table. Homes that are fully turnkey with pricing that sets it apart from the competition is what will sell, maybe 5 to 10% below market value. Otherwise, you're just better off waiting till the middle of 2024.
What about buyers? Should they be buying now or waiting till later in 2024?
You know, I think this is the last 3 to 6 months for buyers to get value since the down market started, last year. Across the market, there is value right now to buy. The market will shift on buyers quicker than they think by middle of next year, given all that I've shared here. And we highly recommend as a buyer to buy now in the next 3 to 6 months and just kind of refinance later.
Tarek, this has been wonderful information, and we really appreciate all the education. Thank you so much.
You're most welcome, and to everybody out there watching, hopefully this has been very helpful. It's just really always a pleasure for us to provide the insights and with our analytical approach to the market. Please go to the morshedgroup.com for past market updates and much more information that we post monthly. And we'll see you next time.